Sort of a flat open, but remember, the marginal mover for the market remains trade. We were up last week on trade optimism, down on Friday a little bit when there was a little less optimistic, but came back. I just want to note the S&P is half a point from half a percent from a 52-week high. Shanghai, another down night. We are at 52-week lows in Shanghai. I just want to put that up there and see what you got. And that's been a major problem. We've been seeing this influence on emerging markets. Of course, China's the largest weight in emerging markets right now. Put up the EEM versus the S&P 500, the emerging market index. And basically, you can see the emerging market world started diverging in May. Look at that there. There it is, the S&P on the orange, and the white, of course, is the EEM, the emerging market index. That divergence started in May. That was the rise in the dollar and the start of the tariff and the trade war talk. So you see what this has done to the whole emerging market world, but particularly to the Asian emerging market world and China as well. Here in the U.S. sector, sort of a mixed open, but you see that EEM to the downside once again. Some banks marginally on the upside for a change. We haven't seen that happen for a little while. Energy also up, and there's your metals and mining, unusual to the upside. Usually they move down on trade talk. But there's the EEM again down here. We're more than 20% off of the highs on the EEM. The reason the S&P hasn't hit new highs, and we were heading that direction on Friday, was that the banks have simply refused to participate in the rally for several months now. So look at in September, big names, Wells Fargo, Key, Comerica, Citigroup, we're up in September, but not the banks. And that's been a major problem. In fact, we keep talking about banks at 52-week highs, but some are going the other ways. And there's a number of problems for the banks. We had that Barclays conference last week, which was just all a downer generally for the banks. So we've got a problem for flat yield curve. We've got a problem with loan growth, fair to flattish, higher deposit costs because rates are up a little. It costs them more for their deposits overall. So we're 0.5% from a 52-week high in the S&P. There are stocks, big bank stocks, that are just near 52-week lows. If you look at some of the big names, Citi, PNC, U.S. Bancorp, Fifth Third, Synovus, they're 10, 11% from 52-week lows, not highs. That's how poor the bank market has gone. Finally, I just want to note NIO here, which is the big Chinese electric vehicle maker, go public last Wednesday, $6.25, $6.26. You see it down here today. We got Lucid Motor getting $1 billion investment from Saudi Arabia. That's really moved that stock to the down. But remember, up big last week.